will welcome our panelists to the webinar and lead us in a very interesting discussion. We invite all our webinar attendees to ask questions for the panelists throughout the session, and we'll try to get around to as many questions as possible in the Q&A at the end of the session. Okay, so without further ado, I'll hand over to our moderator. Over to you, Tanzil.
Excellent. Thank you very much, Malik, for your kind introduction. Welcome everybody to this interesting webinar about accelerating solar rooftop in the MENA region. We have two really good panelists with us today. We have firstly Nimish Lahoti, who's the business developer with the Customer Solutions Department for ENGIE. He focuses on solar rooftop among other areas. ENGIE is one of the biggest utility companies in the world. We also have Emad Hassan, who's the project manager for the Green Economy Financing Facility, which is from a facility run through the European Bank for Reconstruction and Development. Welcome, gentlemen. Just to let you all know how we'll do the webinar today, I'll do a few short introductory remarks to the topic, and then we'll dive into a Q&A with our two panelists. Feel free to send questions in the chat box or in the Q&A box. I'll monitor those and try to weave those into the dialogue. More questions is always good because then it means for a nice organic discussion with our panelists, and we'll do our best to try and get through everything. So yes, do a reminder, do send it either in the chat box or in the Q&A. Okay, I hope that's clear. So this topic is a very important and interesting one, especially now in the context of what's happening with the economic crisis being unleashed by the COVID-19 pandemic. We've seen reports from the International Energy Agency, which has highlighted that green energy can create up to 9 million jobs per year globally. If you think about that in terms of how many people are out of employment right now, there's a lot of potential there in terms of, you know, engineers or other people who can work to actually implement solar rooftops. So this is a really important area that the MENA market could really capitalize on. It has a lot of young people who are out of jobs. How can we get them into green jobs? So, and the market here seems further behind than others. So we want to explore why that's the case and what can be done to actually accelerate the growth of the solar rooftop market in this region. So without further ado, Nimish, I'd like to start with you, please, first. Can you explain briefly what does your organization do to promote the adoption of solar rooftop?
Sure. Thanks, Tanzil, and hello everyone. So as Tanzil already gave an introduction, I have been working with ENGIE, and I joined ENGIE 5 years back, and that's when I actually came to Dubai. And this was almost the same time when the Shams Dubai net metering regulation was launched in Dubai. So I have been following the market very closely, see it evolve in the last 5 years, and have been directly involved in the rooftop solar development for ENGIE in the last 2 years. So indeed, it's my pleasure to share some of the insights that I have gained in these 2 years. So in terms of introduction of ENGIE, as many of you would be aware, we are a global energy company present in more than 70 countries. And we are mostly present in 4 broad activities. Firstly is the thermal power generation, wherein we develop, own and operate thermal power projects, be it gas-fired power plants or nuclear power plants. Renewable energy projects, again on a utility scale with technologies in terms of wind, solar, hydro, biofuels, and others. In the infrastructure segment, wherein we again own and develop infrastructure assets like district cooling networks and heating networks, gas distribution and transmission networks. And lastly, in the client solutions, where we offer smart energy services to B2B, B2C customers and local authorities and rooftop solar is one of the key activities as part of these client solutions. ENGIE, as part of its overall strategy in terms of the energy transition, we focus on what we call the 3D, which is decarbonization, decentralization, and digitization. And as you can imagine, rooftop solar fits very well as part of the core to this strategy. And as part of ENGIE's vision to make a zero carbon transition possible for customers and local authorities, what we are trying to promote is to promote all our global sophisticated products with financing to ensure that we can have rooftop, we can have green energy generation at customers' premises, and also reduce their energy consumption by adopting various energy conservation measures. So in terms of rooftop solar specifically, what we offer is a fully integrated services, right from permitting, design and engineering, installation, financing, and operations and maintenance to customers. So effectively a one-stop shop to customers where they can focus on their core activities, generate savings from reduced electricity bills, and most importantly, to reduce their carbon footprint.
Great. Thank you very much for that comprehensive introduction, Nimish. Much appreciated. I'm sure we can dive into some of those topics a bit more during the chat. And now over to you, Emad. Could you explain a bit more about your role and what your organization does to promote the adoption of solar rooftop in the MENA region?
Certainly. We have a consulting group that is really chartered by EBRD, by the European Bank of Reconstruction and Development, to run a facility, an energy financing facility, which you just mentioned it, the Green Economy Financing Facility, or known as GEF. GEF is really a financing mechanism, came about by EBRD to try to engage financing institutions in one country to avail financing coming from development partners and let the financial institutions reach out for that fund and then start lending it to end users. And the caveat here is it has to be a green type of an application. So you can take some commercial or industrial facility interested in borrowing some money from this participating financing institution, using the money that's being availed by EBRD, by the bank, and lending it to that bank, provided that the end user or the borrower, the end borrower, is adhering to certain criteria, like the amount of kilowatt hour saves or PV installed that would basically mitigate the generation of certain electricity and so on and so forth. That's what this facility is doing. It is successful. We have now about 4 facilities in Egypt alone. There's a GEF in Morocco, there's one in Turkey, there's one in Lebanon, and I'm sure there exists somewhere else, but the names are not present in my head. But in Egypt we have 4 because I think the idea saw some good traction by the banks. So we started to create different GEFs, different facilities, one for small and medium enterprises, one is focusing on a certain sector, and so on and so forth. So our job really here is to make sure that this money is being invested for the right cause and getting the proper carbon reduction at the end. As consultants, that's what I do, and I'm very honored to be leading a group of very professional consultants and work with EBRD. And the good thing is this model is not only availing money, but it's like a pool for different donors and development partners to try to put the money into it. So we have organizations like the European Investment Bank, the Agency of French Development, AFD. We have the EU, of course. The European Union is basically providing a base of support for all the technical assistance and offering some incentives on top of that. So the whole scheme here is about how EBRD engineered to get all these donors' objectives aligned and offer them to a certain market according to what these market needs are, and then use the local financing institutions as channels to disseminate these money into good application that would yield carbon reduction.
Great. Thank you very much, Emad, for that interesting and comprehensive introduction to what you're doing as well. I'm sure, again, we can dive into some of these as well as I go through some of the questions. And Emad, maybe I can start with you with the first question, actually, because you mentioned about the European Union experience. So what do you think we can learn from other rooftop markets across the world? You know, for example, Germany and France have seen very attractive investment returns on solar rooftop installation. What can we take from these experiences and apply to this region, the MENA region?
Well, my experience, which has been global, but not necessarily on PV or on the rooftop, but I have a good understanding of the rooftop business. But my take from the global experience is I think every country has its own unique circumstances. However, nowadays we have some common issues that are basically upon us to deal with, like the price of oil, the how utilities now are starting to look at PV as a resource and whether it's competing with some traditional fuel or not. What each country has a plan for the foreseeing future to get PV or solar rooftop to be the provider of these resources. And I'm sure in Egypt and as well as the GCC, you will have some common issues of regulations that are starting to look a little different for the next 2 to 5 years than they have been for the last 10 years. There has been a lot of push to go solar, renewable energy and energy efficiency. And then all of a sudden, with the issues, the dynamics I just highlighted, now things are being looked at a little differently. And maybe the timeline of it is a little different. But in the final analysis, I think you cannot really have one experience exported from one country and then dress it up to another country. I'll speak for Egypt because I'm more familiar with the terrain, and I'm sure Nimish will be able to mention the GCC and probably North Africa. But I tell you, in Egypt, there has been a very, very strong push to get renewables in, but it was expensive, so it couldn't compete. A lot of donors tried to offer a lot of incentives. And as the prices went down, of course, not as down as it is in Dubai and Abu Dhabi, but when it gets down to a cost or it becomes competitive, then you have outside issues, such as the oil prices and such as how utilities are like over-supplied with the traditional. Like in Egypt, the installed capacity is far more higher than the peak demand. So there is excess capacity of electricity. Of course, if you're a policy maker, you'll have to think about PV, whether you can wait on it a little bit. You're not going to push it aside, but you may not have the same appetite as you once had. So I cannot really borrow from the German or the French experience. I know the German was very, very advanced. It got to a point where they had to stop it also because there was enough supply. The second issue is the network that you have, the transmission and distribution and the metering system, and whether it can accept a PV intervention and it cannot get into the network easily without any distortion or any problems for the utility. So of course, each geographic area you may find that the network, like for example in Egypt, the network is pretty old. So I'm sure in the GCC it's a new and smart network and smart meters. So I cannot really give you an answer that one size fits all. I think there's a lot of issues that come into play.
Right. Thank you, Ahmad. Nimish, would you have anything to add here? What can we learn from other rooftop markets across the world?
Yep, indeed. I mean, specifically what we have seen is in the Dubai market, which has been at the forefront of the rooftop adoption in the GCC countries. So we do see that there has been a lot of penetration, but then there are a few learnings, or let's say few mismatches that when we compare with our European counterparts, we see that, okay, if things would have been over here, this would have been much better. I would say one of the key challenges that we face in the Dubai market is the entire credit assessment process and the credit risk assessment process when we offer our solutions to customers. And in terms of that, what we see is in the European markets, our counterparts, they have it very easy in terms of in terms of a default from customers. Because in terms of remedial measures, they do have, in case the customer does not pay, they do have measures where they can actually sell the power from the solar directly on the grid, either through a feed-in mechanism or through an open access mechanism. And that's not what is available in Dubai. And this makes the entire financing structure, the contractual structure very complicated. And if this can be sort of addressed, which I agree to what Imad said, that every geography and every region has its own specificities, so we cannot directly compare. But that is one area that is sort of, helping the European countries to move very fast on the rooftop solar, and possibly one area that needs to be addressed in the future.
Thank you, Nimish, and we'll dive further into the challenges in a while. Actually, while I have you, Nimish, as well, I wanted to ask you about some of them, latest and most interesting technical advancements in rooftop. What are some of these advancements in rooftop right now?
Well, maybe not to dive into too much technical, but on a broader level, if I were to highlight, I guess a few things on the panels, on the inverters, which is really helping to improve the economics of rooftop solar solution for CNI customers. One is we clearly know that the panel technology is improving over the years. What we had was 300 to 325 watt peak panels available in the market. That has gone up, and the efficiency in terms of the watt peak per meter square. So basically the capacity per area that would be available, that has improved by quite leaps and bounds. So what really happens is when you have a limited roof space, you can now fit in much larger capacity, and the economies are much better in that case. So that's on the panel side. On the inverter side, we know that the technology is getting much more robust, specifically for the Dubai market, where we see you have very high temperatures and you have a lot of clippings. So now the inverters are able to manage the high clippings where the DC to AC ratio could be, the gap could be very wide. And thus from capacity side, if there's a constraint, we can still install a larger capacity on the PV for the PV panels. So that's another area where both of these are basically helping to ensure that the cost of the PV solution as a whole is actually getting better, and the efficiency in terms of yield that we can have from a particular roof available is much better. In terms of operations and maintenance, I would imagine one of the major issues that we face in this region is the dust, and cleaning is a key periodic maintenance activity that we need to carry out. And what we have seen is there are various dry cleaning methodologies that have now been come in the market, which avoids the use of water and also save the kind of water consumption that would be otherwise required. So now literally we know that a lot of O&M companies and ourselves, we have been able to use water only once or twice in a year to clean the panels. For the rest of the years, we can use tank cleaning technologies. And we have been hearing about a lot of robotic cleaning, though for rooftop, it is still some time to go before we can use robotic cleaning, but we do see a few companies pitching their solutions and evolving their solutions to make it happen.
Excellent. Thank you very much, Nimish. And a reminder to the audience as well, very much welcome any questions that you have on any of the topics that have been discussed so far. Just drop your questions into the chat box or into the question and answer box. Right, I'd like to just move on to the issue around how do we get the market here in the MENA region kind of more open. So as an industry, maybe I can start with you first, Imad. As an industry, what steps do you think need to be taken to advance the solar rooftop industry in the MENA region?
I guess there's a whole bunch of issues come together, but the most basic issue is that you need to have a stable regulation base under you to be able to build up a market. The market development is usually a slow process. It is not in months, it counts in years. I mean, you start introducing energy efficiency in one region, it takes you 5 to 7 years before traction happens. So because of that timeline, you need to have a very good base under you, at least proper regulations so people can build up on. The problem we're seeing in Egypt is that every time we start seeing some investment coming into that sector or into that business, and small companies are starting to formulate units to get involved, even down to having a couple of graduate students starting a company to do the cleaning up of the panels in some tourist areas. So, and then after you get into that traction and you have a couple 100, 300 companies, then you start getting these mixed signals from policymakers. They're not necessarily all negative, but it just doesn't quite feed the market with the type of fuel that it needs. The market needs to feel that there is a level playing field, that there is no favoritism for government against the private sector, and two, is that there is an opportunity for people to start investing their own capital into this. So stability, I think, is that we need to be careful, and especially in developing countries, in countries where there's been a lot of traditional things in the past and things are changing. Unlike countries that started fresh, like in the GCC, and they had the opportunity to build up something from the bottom up without having to change some inherited regulations. So I would say stability in rule making and guidelines. I think the second one is you have to have a proper channels for investing. Rooftop is, again, this is a technology that has, it goes and it lives and dies by the word of mouth. If you go to a place and a couple of installers don't do their homework right, then you start getting a bad reputation for the technology. And then for every 10 good jobs, one job can just ruin the whole market. So you need to have, some sort of a screening as to the type of the technical competence of people in that market. So you need standards, you need accreditation. I think in Egypt, I know that we have the new and renewable authority as a very good certification system for people that want to get into that job. So policy making, quality control in the quality, and then financing schemes that are more compatible with the nature of how business is being done in a certain country. In Egypt, you have a lot of outside of the financing institutions business. People used a lot of cash to do their business. Not everybody has a bank account. So you need to get people, you need to put money in front of them in a format that they can understand, that they're comfortable with. So policy making, quality control, and then means of financing that are much more in sync with a certain locale that you're operating in.
Right. Thank you, Ahmad, very much. Thank you. So, and now we're beginning to get some questions from the audience, which I'll definitely get to. But before doing so, I'd like to give Nimish a chance to answer the same question you had, Ahmad, which is, as an industry, what steps need to be taken? Do you agree with what Ahmad has said, or do you have anything extra to add on top of that?
Yep, I mean, totally agree with what Ahmad said, and maybe to elaborate that from the perspective that we have from GCC, where clearly the regulation and the time that the market would take to develop, I can elaborate that a bit more. So what we see is overall in the GCC, we see Dubai has been at the forefront. We have currently almost 125 megawatt that is installed under the rooftop Shams Dubai program. And this has come over a period of 5 years. And what we have seen is in the first 2 years, we were just more or less at 20 megawatt. And then we have seen the market really expanding in the last 3 years from 20 megawatt to almost 100 more megawatts in the next 3 years. And I think there are two more favorable factors that has really driven this market. So one is obviously the regulation, a favorable regulation where you have a net metering scheme and the clients benefit in terms of the monetary benefit, it's at the same level as what DEWA would charge any commercial or industrial customer. So that's very high. And second is also the fact that the commercial industrial tariffs is not subsidized at all in Dubai, like what we see in other parts of GCC where the tariffs are really low. And that's not a huge incentive possibly for CNI customers to invest in this kind of projects. So these are two, let's say, the trigger factors that would lead the market to develop. And what we have really seen is in the last 3 years, we have seen a few consultants who have come on board, who have been able to educate and create awareness among customers that how they can benefit from this regulation in place, and eventually what kind of business models would be more suitable for them. So even over there, we have seen a trend where in the first 2 years, most of the projects was on an EPC mode, and in the last few years, we have seen that more and more customers have a better understanding of how a long-term lease, a solar lease, or a corporate PPA would work, and they are much more able to understand those concepts, get into those contractual details, and go for those kind of projects. So that's one. We have seen also a lot of transparency and a lot of clarity from DEWA in terms of the approval process, and that has given confidence to the EPC and developers like us to know that for sure this, in terms of if we start a project, for sure we know what are the steps to ensure that the project is commissioned and completed and our investments are secured. So I think that is a big comfort, as Imad said. You don't need to have cyclical policy issues and those kind of things. And lastly, we have seen a lot of EPC and a lot of developers come up in the Dubai market, making it very competitive and very attractive eventually for the CNI customers. Unfortunately, recently Dubai came out revising the regulation and having a cap of 2 megawatt on this under the scheme, and to our, at least for us as NG, because we were targeting only larger projects. Obviously, this has been a bit of a setback. But what we hear from the market is, in a way, for a lot of smaller players, this is actually a much more promising opportunity for them to dwell into. And it also helps in terms of what we speak about the mass adoption, because now smaller commercial and industrial customers will be actually able to benefit from rooftop solar market, as they also get the focus of the larger developers and larger EPC companies, which wasn't the case earlier. So overall, I would say, for sure, apart from Dubai, we are seeing the Saudi market, the Bahrain market, where they have recently announced such net metering regulations. So the trigger points has been created. We know that in Saudi, the subsidies on tariff have really gone off. So the tariffs are at very good levels to increase the adoption of solar. So those are the next two markets that we're looking at.
Excellent, thank you. You touched on a lot of really important issues around the regulation and the confidence that the regulators can give through transparency, and citing the example of Dubai. And actually, while I have you, Nimish, we have a question about the Dubai program, specifically from Wasim. Mr. Wasim was talking about this limits of the 2 megawatt installation as a cap. And no ground mounting in the Emirate of Dubai, except for when DEWA is involved. So he's asking the question, if the government is stating a strategy on renewable energy and it's limiting it at the same time, wouldn't this affect solar EPCs, energy performance contracting? You mentioned you as NG are affected by this.
Yeah. No, indeed, obviously, when this regulation came, and it came completely overnight without any consultation. So obviously, this was sort of a setback to what the industry has developed, because we know a lot of small companies have turned into solar EPCs and trying to approach the market. So clearly, that has been a setback in terms of the capacities that will be installed. But I think from DEWA's perspective, again, I guess what they have done is they have taken the first 5 years to really promote the rooftop solar activity and under the net metering scheme. And at some point, they do realize that they have the limitations. You cannot have literally 10, 15, 20 megawatt rooftop solar or ground mounted solar placed at customers' premises. That's really a risk to what DEWA has been doing in terms of their business. And what we also understand from DEWA, based on some of our discussions, is it is also in terms of the grid stability. So the local grid stability, when you have such large projects concentrated at one customer's premises, that creates this concentration risk. So they wanted to diversify that a bit, and also to diversify the fact that more and more facility owners could get the benefit of this net metering scheme. And it's not only limited to a few players who have very large roofs, because in Dubai we had seen some projects with 15 megawatts on rooftop and even 30 to 40 megawatts on ground mounted installations being possible. So I think that really scared off possibly DEWA. And I guess they are maybe at the right time or not. That's a question to be answered. But I guess from their perspective, it makes sense that they have come up with this cap. Maybe the cap of 2 megawatt could be deliberated and discussed, but okay, that's what it is. And now we see Saudi, they have a similar cap of 2 megawatt for the rooftop projects. Bahrain, I think it's 5 megawatt, though I'm not very sure, but even they have a cap in place. It's not unlimited capacity that you can install.
Right, thank you, Nimish. Emad, we have a few questions about Egypt, actually, from the audience. One is from Mr. Ahmed Mofid. How do you think the latest Egypt ERA, I assume that means Electricity Regulatory Authority, regulation would affect the industry?
I was worried about that question will come, but I expected it. Well, this is one I was really pointing out to. I think the decision was not a bad decision. I think a decision just was introduced to people, articulated in a way that sent a negative sentiment into the market. I think the government was concerned about the stability of the network, and it was also worried about the cross-subsidy. There was a way of cross-subsidizing customers, because you know that the energy prices in Egypt were heavily subsidized, and we're embarking on a program for 5 years that keeps being extended to rationalize the subsidy. So these two factors, plus the fact also that, as Nimish said, we had similar situation where projects started to get into larger size. We started to get integrators and like the ESCO type that works with PPAs, stepping into the market and looking for large size projects. You have certain sectors that are starting to think of PV more favorably, like the water pumping, agricultural water pumping, the food industries, the pharmaceuticals, the IT. Everybody who has a need of heavy-duty electricity or pumping needs, they started to look for PV. So I think the regulators started to think that there might be a need to try to control this market development in a certain format. They also came out with a clause that said we're going to limit the PV contribution, the small scale PV contribution to 300 megawatts. But it didn't say that the market has 75. Grid connected, that is. We're not talking about off-grid. The grid connected, it's 75. So 75 to 300 is still a way to go. 75 accumulated over 10 years. So everybody thought the 300, this is going to stop after that, and the government is changing its mind and there's no longer an appetite, when in fact it is not. It's just the way the decision was written. Other issues, like basically getting the quality is done through a study commissioned by Egypt ERA, and the client would pay for it. A few things like that. Overall, I think the decision technically was not bad. I think it could have been introduced to the market in a little bit more of in a process that can probably educate everybody in the market, the small and big players, as to why it came out the way it did.
Okay, thank you.
I can add one thing in the facility that we're working on. We have a lot of energy and renewable energy. We used to have, a few projects here and there with PV. It started to increase, and then as soon as the decision came out, we have a flurry of a lot of PV projects coming into the banks, thinking that the net metering is going to run out for them because of this 300 megawatt clause. So now all of a sudden we're facing a larger than usual number of PV people coming to borrow money to do it. So it's a demand-supply type of a motion. I am not that really worried about the future of PV. I think we're just probably going to stall a little bit in terms of market development. We were building up the market too strongly and too fast. I think we might take a hiatus for a couple of years and then get back into it again as the demand catches up with the installed capacity.
So, Mr. Ahmad, actually, someone you mentioned about the facility, one of the facilities that you're involved in. We have a question from May Ragab, who's asking for more details about the 4 facilities in Egypt and where and in which stage are the projects at now.
We have 4 facilities. The first 2 are basically, like I said, it's called GEF Egypt, the Green Economy Financing Facility for Egypt. That was 157 million. It's done through Alexandria Bank, and QNB, Qatar National Bank, and Arab African International Bank. These 3 banks are using this facility to give loans to their customers. There are certain rules and guidelines about energy efficiency and renewables, how to calculate and how to ensure there is a certain amount of savings. There's an incentive package offered by the EU that if you meet a certain standards of savings, you get 10% knocked out of your loan. If you borrow $1 million and you really meet all the standards, then your loan sees a forgiveness of about $100,000. That's the first one. And the second one got built on top of it, but it's funded by a different group of people. The first ones were funded by the European Investment Bank and the French Development Agency. And then the second one is called, it's coming from the Green Climate Fund. That's the one that's basically putting the money behind it, and it's circulated to the market through QNB, through Qatar National Bank. So these are the first two facilities. We have two other facilities run by a different team, but we're still connected with the same people. One is with the National Bank of Egypt, focused on SMEs, and one is focused on green value chain and value chain. So it looks into things that are beyond, over and beyond just water, energy and renewables. It gets into water, it gets into some green aspects, some things that bring value to the industry. So it's just a different type of target groups that the facilities are offered to. But it's again the same approach, but it has another bank. It has the National Bank of Dubai, who's working on that along with the QNB. And it's funded by EBRD, of course, and the Green Climate Fund. And then the last one, as I mentioned, which is the National Bank of Egypt, that's 100 million. And that's purely for National Bank of Egypt to run it, but it's focused on SMEs, and it overlaps with some things that the Central Bank of Egypt offers also.
Excellent, thank you. Sounds very fascinating, really interesting, those examples you mentioned. And as we're talking about financing specifically, I'd like to move on to a bit about the financing challenges. Maybe Nimish, I can get you involved first. One of the, if I put myself in the shoes of either a business or an owner of a house, one of the biggest challenges would be the upfront capital costs to put solar panels on, on a villa or wherever you live, or an office block. So how are you trying to address these sorts of challenges as NG?
So in terms of commercial and industrial facilities, I think this challenge, at least in the Dubai market, and I think in the broader GCC market, is sort of addressed, because we do have certain economies of scale. And if we can get a 1-2 megawatt, we know that there are many developers like NG who are happy to finance those kind of projects on a long-term basis, be it a solar lease or a corporate PPA. So those solutions are available. Now the big challenge comes indeed in the residential segment. If you have a villa and those kind of stuff, how would you finance those projects if you don't want to spend on the front capex? What we have seen is maybe an example that I know from the Oman market, where the local regulator, they are aggregating such rooftops into a scheme that they call the Sahim scheme. And the plan is to, once they have aggregated such villas which have the necessary roof strength and everything, so they qualify each and every villa, so that they can set up a minimum capacity, the roof strength is proper, and the internet connection point is in place. That's where they aggregate all those roofs, and they plan to finance this project on a PPP basis. So maybe these are the kind of schemes that could be very interesting, where they have some sort of feeding mechanisms or the likes, and to promote rooftop solar for residentials. Otherwise, personally, from NG's perspective, we had a very high level evaluation of that market. We know the tariffs are subsidized for the residential space, and also the economies are very low. So for individual rooftops, that's very challenging, I can imagine.
Great, thank you. Ahmad, I'd like to bring you into this as well. What's your perspective on these upfront capital costs and the challenges for large consumers, or also small kind of consumers as well?
Well, first cost is always a problem in developing countries, because people, like I said, in Egypt are not really groomed up or brought up on the credit system. So borrowing from the bank is something that just started in Egypt some 20 or 30 years ago. Not started as in from scratch, but it started to become more popular 20, 30 years ago, where businesses would borrow money from the bank. It used to be very focused on the corporation that you're lending. If they are AAA, they get the money, whatever it is that they'll do. But then if you start thinking about project finance, a lot of people don't have the savvy to be able to convince the bank that their project will generate the kind of cash flow that it was being necessary to get the bank to be comfortable. So I think I think we have a dual problem here, which is the knowledge base of the banking system on how to look into project finance, and then at the same time, the technical competence or expertise within the customer or the small and medium customer organization to be able to articulate their needs and their ability to generate the kind of cash that will pay off the loan. So there is a little bit of an education, not just availability of cash. I think cash will always be available if there's a demand for it. It's a question is to untangle that cash for the needs of certain customers. And the small and medium, in my perspective, in developing countries are the ones that need that education. And that's why you see donors and development partners coming in and looking for the small and medium. They're really the backbone of any economy. So when they don't know how to make the case to banks to lend them, you'll find out banks have the comfort zone of going to the big guys. They want to go to the big fish because they know they're going to get their money back. But a small guy who's going to make his money out of a grocery store or some kind of a garment business cannot always make the case to the banks. So this is where I think that's the role that we play with EBRD, to try to get to the front line with the banks and see if we can sort out the customers that truly have a case with energy and environmental project. But away from us, when you talk about the small and medium, like in Egypt, a huge market, a big market in the small and medium. There is a much bigger question than is there enough money for them. Is the first cost an issue? No, there is a bigger issue of can they really borrow money from the bank? Do they know how to borrow money from the bank?
Thank you, Ahmad. And actually related to this, there's a question about from Sharif Noor, titled it, "A Financing Plan. How can we make use of a finance plan to convince a client, or how do we convince a client to make use of such a plan? Who are the target candidates for finance plans?"
Who's we in this case? I mean, are we talking about it?
I'm just reading the question now. I'm guessing they might be a solar company, potentially.
Okay.
Yeah.
So how would a business that's coming in as a provider of services into the solar business or the PV business be able to market their services that can be a bankable proposal to a bank? I guess that's probably what Mr. Noor is saying. I wonder if there's one answer to this question. I mean, it all depends. It depends and it depends and it depends. But I think the easiest way to do is to look for some success stories that already happened, case studies that happened. A lot of the development partners have been doing projects in the Middle East, and they document these things in case studies. When you look at that case study and you look at the type of information that's being spilled out, you'll get a feel of what the bankers are looking for. The bankers want to know not whether or not you're an honest person. The bankers want to know that your project will be there for a long time. Your project will continue to produce. The people in the business that are behind that machine will continue to run it fine. So I think to answer Sharif's question, you have to have somebody with the understanding of business development on your staff that knows how to work with financing institutions. It's not all engineering. It's how you translate engineering into banking language. I guess that's as a summarized answer as I can come up with.
Right. Thank you, Ahmad. Nimish, as a business developer at NG, how do you make that case for financing?
So obviously we, as part of our strategy, we are happy to finance this project on a corporate basis, where NG provides the entire finance so that we can promote the use of green energy. And that's the NG's DNA, where we own, operate projects on a long-term basis. Having said that, obviously in terms of optimization, and that's what we also do in European markets, is to actually be able to aggregate projects and eventually be able to project finance them through banks and other financing institutions. Now that has been a bit of a challenge, specifically in the GCC market. For instance, in Dubai, our intent has been to enable that we are able to refinance the portfolio that we would eventually develop under the project finance mechanism. What we need is very standard contracts in place with with the companies, the credit risk assessment being very well done, and the due diligence of the client. And these are some of the issues where there is a lot of gap and a lot of from clients' perspective, because they don't really, as Imad mentioned, they don't really understand the nuances of these complex contractual arrangements and why they need all those lengthy contracts. So that's one element. And eventually, even from a local bank's perspective, typically what we know is in this region, they have an appetite for 8 to 10 to 12 years, but not for longer tenors than this. And that is one of the other challenges when we have on the refinancing assumption is we eventually need to have a further refinancing risk as part of our plan. So typically, until this 2 megawatt cap came in, we were still making certain aggressive assumptions, or not aggressive, but realistic assumptions, so that we would be able to refinance this kind of projects. But now with this 2 megawatt cap, even that has become a bit challenging.
Interesting. And yeah, I'd like to kind of go on to a topic where, again, we've had a couple of questions related to this. It's going back to, I guess, this regulation challenge. Speaking specifically about the GCC first, Nimish, you have these big state-owned utility companies like DEWA or ADWIA, which kind of basically are the monopoly on the grid. And it seems like for smaller consumers, like residential customers, they unless there's even a net metering law doesn't give them a direct kind of money. They can't feed in. They don't get a tariff. They get a bit of credit off their bill, which hopefully over a period of time might give them a bit of payback if they're committed potentially as an owner. So do you think are there any agreements between electrical companies and individual users to enable them to sell power to the grid at the moment?
No, so that's one issue. So obviously, as an electrical company, as let's say NG, who's installing solar panels, we cannot be selling power to the grid. And what's only available is, as you mentioned clearly, is that it's the customer at whose premises the solar is set up. Only he can export the power to the grid and get credits, which can be offsetted against the import of power at an eventual time. So economically, from customers' point of view, this is not really bad, because at 12 US cents per kilowatt hour tariff, this is the kind of benefit that you get when you export power to the grid, which is actually very good. And which is also creating sort of a limitation for the regulators, because they are providing their local grid available to these customers, and they have to kind of pay this heavy price for power being exported. While if they actually procure the power from their utility scale projects, and we know now the solar tariffs in Dubai and some of the other utility scale projects have reached below $1.50 cents. There's a huge gap over there. So, and when we discuss these things with DEWA, what we also get to know is when you compare to Europe, the tariff is actually broken out into various components. So you have the open access and wheeling tariff, you have the actual generation of power, and that's one of the components. And if you were able to do that, that's when you could actually provide a feeding tariff to the customers from the grid at the right level, and still have the local grid available to them, and not let the customer benefit from it completely. So these are more of a macro policy level issue, I guess, because it also means that the entire tariff structure and mechanism changes, and whether that is feasible to do just for only a rooftop solar sort of segment is a debatable topic.
Thanks. Emad, anything to add on to that point?
Well, no, I don't think, I agree with you. I mean, it's not about a cash, even in the net metering system that we have, it's not about cash being given. It's actually a settlement at the end of the year with the charges. So there's no contribution for the first cost, if that's what you're looking for.
Thank you. Yeah, I mean, I kind of want to explore this thing about how do we advance the residential markets, because we've had a question before this about how do we encourage solar, rooftop solar among the common people of the country. Just to take an example in Dubai, for example, quite a few people I know are renting. So what's the incentive for them to invest in solar rooftop program?
Indeed, I mean, from a purely economic perspective, the incentive is very limited because one, the residential tariff is very low. And as you said, most of the people over here are renting. So from a owner's perspective, if they are installing solar, can he leverage on the benefit of reduced electricity costs from his future tenants? That's one of the key questions to be answered. And we know for sure it has been a challenging area. So most of the rooftop projects on the residential has really come at places where either the developer or the end customer was really conscious of the fact that he has to reduce his carbon footprint and really in a way uh, make a dent on the towards the carbon footprint and hence use solar. We know, for example, the sustainable city where I mean, this is one of their marketing techniques is to promote the fact that they have most of their either generation or consumption of energy is through green mechanisms or very efficient mechanisms. So maybe this could be one of the ways to further promote it.
Thank you. Ahmad, any views on this question?
Yeah, so in Egypt, it's a totally different ball game because in Dubai, I think most houses, it's either you have a high-rise tower or individual standalone homes. But in Egypt, the building stock is very old. The building regulations and the building standards were sort of ignored for a while because of the housing crunch in the 60s and the 70s. So if you look at the roofs that exist in Cairo, for example, they don't lend themselves to solar energy for the most part. I mean, you need to go to like compounds and gated communities where people have control over their own roofs. But if you go to any 6-7-story residential building here in Cairo, you'll be surprised what you find. So practically speaking, you cannot do that in the congested cities like in Cairo. I'm sure it's the same thing in some developing countries. Again, not quite the GCC, but a lot of the old cultured or the old city type of situations are very difficult to find that. You have shadows of a higher building to the building next to it that will prevent the sun, for example. You have a 12-story building right next to a 5-story building. So you have people that are using the roof for different factors. So it's not safe to leave any product that generates electricity at that time. So what I'm saying is, again, we go back to no one size fits all. If you go to Cairo, we've seen a lot of traction in the gated communities, people that have money. They realize that this is a good investment for them, both on a PV for electricity and the solar water heaters for the thermal. But again, these are few and far in between. They do not represent the core of the lower to middle class.
Thank you. So Ahmad, I have a question directed to you from Mona Al-Gamal. Is there any opportunity for startup companies in the field of solar PV in Egypt? And what are the challenges they will face?
Well, there's always a start. There's always a startup, but my guess is that somebody has to. You cannot really go into a market and do what 250 other people doing. Nowadays, there's a lot of technologies. There's a lot of issues that maybe different sectors. So if you're starting up a company, my advice to you is study the market first. Do not go in thinking. Look at your business model. Look at what it is that you're offering. How competitive. Who is your target customer? And is that customer knowledgeable enough to appreciate the solar business? Do they have what it takes to maintain it? So, because we've seen a lot of small companies. I'll give you some of statistics. There's north of 300 companies in Egypt registered with the newer Renewable Energy Authority, but there's 20 in the market that we see working. So where are the other 280? So don't make the mistake of just jumping in because you already know how a PV system works and you can install a panel. Do a very good study of your market that you want to go after. diagnose what the demands and the needs for those customers are, look for a financing mechanism that would support you. That would be a good opportunity for you. And look also for partnership with the bigger companies that have more experience so that you can add something onto your CV when you start getting bigger, if you're just a startup. And the last one is technology, of course. There's a lot of applications now that the young people, not myself, the young people can use the technology to come up with a supporting application system that can help the customers monitor their PV system from remote areas. They can turn on their system when they're in the North Coast having some summer vacation or whatever. So think of in all these directions. You need to study your market, you need to be competitive, you need to think technology. Technology is very important, and I think the future, we didn't touch on it today, the battery storage is going to make a huge difference in all the renewable energy because of the storage area. There's a lot of talks with big companies like Elon Musk of Tesla, and they're thinking, you know, in a few years the battery storage will be economically viable and you can buy a battery. Once you get to that, I think the world is going to look different for PV.
Great, thank you. And it's interesting you mentioned about the technology kind of outlook as well. We've had, I know, Nimish, you had a few points earlier about the technical advancements. We have a question from Wadi around technological advances. Has there been research on combining solar rooftop panels with hydro panels to produce electricity and drinking water?
Well, not that I'm aware of, but maybe if this is an idea, there is something that's going on, possibly, but no idea at our end.
Ahmad, have you heard of anything on that?
No, I am not technically qualified to answer that, but my response would be you need to engage the research organizations into this. If you decide that there is a need or a certain niche market for it, there are a lot of university-type research groups that are very hungry to get their teeth into this and get some funding from outside organizations. There's room for them in the market.
Actually, on this one, I've recently witnessed in Dubai, in the desert, the Al Maha Desert Conservation Reserve, there's a technology from a company in the US called Zero Mass, which basically uses solar panels to convert the humidity in the air into drinking water. So there's some really innovation there going on. And they've just, I think, received funding from BlackRock investment to the tune of $50 million, if I'm not mistaken. So there's a lot of innovation in this area happening, which is exciting. So it's great you're mentioning this, Ahmad, about the application of the R&D community in this region that could really help create this kind of more integrated solutions. Will humidity have a negative impact on solar panels, Nimish? That's another question we've had from Ali Mushrafi.
Yes, we are aware that it's not only on the solar panels, but generally in terms of the eventual yield that we have from a solar system. The more dry atmosphere that you have, the better is the performance of the solar system. So yes, humidity has an impact.
Right. Thank you. So we're running out of time now. And I think we've answered most of the questions. There's quite a few comments people have left more as a dialogue with you, Ahmad, I think, in the Q&A box. But I'd like to just start wrapping this up now, because I think we've had some really covered a lot of ground on the topic of how do we accelerate solar rooftop in this region. There's obviously things that can be learned from other markets, but no one size fits all approach. We have to take into account the unique nature of the markets in this region. There's obviously some regulatory movements and policy changes that are required, but are already beginning to happen. We mentioned in Dubai, for example, and the net metering law, and how that could be scaled up and used, and how the lessons learned from that. So, and from a financing perspective as well, there's a lot of interesting lessons learned that could be applied. So I think we've covered a lot of ground. So I'd like to just check if either of you have any final remarks that you'd like to leave with the audience, something positive about what can be done.
I think there's always something positive. There's always something positive. We live in a world that is changing dynamically more than ever before, and I think we're seeing technological advancement popping right, left, and center. Look at the telecommunication business, and I think that the use of the solar energy around us is something that has become not a luxury, but more a necessity as this planet gets overpopulated. I think we're getting into a situation where there's a lot more people now that this planet can support with its resources. So we need to be very smart about how we use the traditional means of supporting our lives. I think that we have a lot of new generation that has a lot of tools in their hands, unlike where our generation grew up with less means to try to get technologies in place, yet we've done some. So the outlook, in my perspective, especially in this region, it should really be very positive. You have a lot of young people. The average age in the Middle East is much, much less than 30 years old. So you have a lot of young people who are versed with technology. They know how to communicate with technology. And the world is moving fast. The channels are open. So if people start looking to the sources of development in China and Japan, in the West, in the US, and start focusing on the science and the technology, not on other things, I think this region can really prosper. It has a lot of resources if it's put together. Unfortunately, the political terrains and framework are not always very positive, but I trust that the younger generation is going to have a say on how to really take this region to a different place. So I'm very optimistic about this.
Excellent. Thank you, Ahmad. Thanks for that optimism. It's much needed sometimes. And Nimish, any words of optimism that you can leave with the audience?
Yep, indeed. And very quickly, for us, definitely the GCC market, the way we have seen it evolve in the last 4 or 5 years towards decentralized energy and promoting those kind of projects, we are very optimistic, tracking the market, and hopefully we do plan and intend to have a nice portfolio of such green projects, specifically in this oil-rich economies. So I think that's always good to know.
Great. Well, thank you. I'll leave with those comments. I'll say thank you to the audience, and I'd like to pass on and to our esteemed panelists, and I'd like to pass on to Malik to close the webinar. Thank you.
Thank you, Tanzid, and both of our panelists for that insightful session. Thank you all so much for joining. The webinar will be available for on-demand viewing in the next couple of days and will be shared over email. We will be announcing future webinars in the next few weeks. Thank you again and have a great afternoon.
Bye, everybody. Thank you. Thank you, Ahmad. Thank you, Nimish. Bye.
Thank you, everyone. Thanks.
Bye, everybody.
Bye.